All right, I'm in this particular trade. I'm managing this particular trade, and one of the things that you need to recognize is that when you're managing trades going long, it's the white rope that you're using as your stop loss. Now, there's no emotion involved. If there is a close beneath that white rope, then it's time to get out of this particular trade. No ifs, ands, and buts about it. So we see we entered into this trade. We had to face this retracement back down to this rope. Here's my stop loss. And as you can see, I have my stop loss far away because I know exactly where I'm going with the stop loss. So if this market, and this is a live trade, live market, by the way, and so if there was to be a red bar that would be made beneath this white rope, then it would have been time to exit that trade. So this white rope is the rope that we're trailing when we're managing a trade like this. So as you can see, we're moving up there. And so we have a little bit of congestion right up in here. But based on our analysis, our total analysis of the market, right? Because we are analysts first. Based on our analysis of the market should be moving way up. And because of that, we are holding on to this position here. So we can see that we've reached an extreme level, but this area is a supply area that was established a couple of days ago, which should be what the market's target will be to go and get that supply. We blew through this supply, this 1 hour supply here, and we're waiting to see what happens here. And so this is where our stop loss is. We have one bar here. If we get one bar beneath, then it's time to get out of this particular trade. Yeah. So we're just watching, waiting to just see what happens here. I have a target, a quick target right there for 350 bucks. This is one contract. So we hit our target area 350 bucks there. That's what we're looking forward to. And that's what we're looking towards the market reaching. So we're trailing the white rope here. And as you can see, the market is now moving up. It's having a problem here changing lanes, if you will. Having a problem changing lanes here. And if it doesn't push through here this time, there we go. If it didn't push through there that time, out of here looking at the potential exit. And because we're getting here to these highs here, as you can see, the market's trying to push that way. So we just following the trading plan. There's no emotion involved at all whatsoever. And as the market continues to move up, we see here, we're moving there towards the target. We are locking here at this high here. Now locked in at that high purposely because as the market went towards that target, you saw that we ran into a problem here. And because we're at the extreme level here, so the market is trying to change lanes to go into the extreme. So here's what I'm saying. Here is our area of balance here. Let me take a circle for you. So here's our area of balance. It's important to recognize when the market is changing lanes. Then here's our area of what we call imbalance, right? And this brown line, as you can see, it represents the area of extreme, right? So the market is trying to move into an extreme extreme area, and as you can see, it's working its way there now. Of course, I exited out because I knew that we're at this high volume area here. Now, one of the things that happened to me here is I traded a couple of different of my accounts, and I was on the micro, the MEQ, and I missed my original entry. My original entry was around in here somewhere. So therefore, this retracement would have been a retracement that I would have been in the positive on. Now, if I was in the positive here, where I should have gotten in, I should have entered, but let me go back. So what I'm saying is that I was on the MEQ, right? And as a result of that, when I made my first trade, it went $30. So that was 50 cents. So it was a few ticks. You look at that 30. Other airline mistaken, so we're starting. I mean, it's supposed to be like they're gonna call this year So that trade went 60 ticks. That trade would have paid me $300, but I was on the MNQ instead of the NQ, so I missed that entry there. And so I ended up taking this entry and we got into this area here, this little trouble area right in here, because once we get to the lane changes, and by the way, pardon that, I'm in a hotel. That's one of the things that I love about this, is that you can do this anywhere. So here is our balance edge. Here is our extreme edge. So as you can see, we're at the extreme edge here. And because we're at the extreme edge, well, the market is a high volume area where we don't know which way are we going to continue in the extreme area, going that way. Where if I was already in where I should have been in, on the macro chart, of course, where I should have been in, then I would have been in the positive here, and I could hold up and put my stop loss underneath this edge and kind of capture that profit. But that's not what happened. But we'll be okay. Things happen, and I wasn't on the right chart at the time where I needed to be. That's okay. So this line that I just drew is the primary liquidity line on the macro chart. You'll learn all about that stuff. So the market, okay, so you see we're just at this area right here. So they're coming to test the extreme edge. So this is the balance edge, this is the imbalance edge, and then this would be actually the extreme edge. So this is the imbalance edge that's being retested again here. Imbalance edge being retested here. So here on technicals, we're still good here. As we see, the single line is coming across. We're above the zero line, but you see that the histogram, we're not getting it really strong like we need to. So we're just looking to continue to work it out. Again, this is the extreme edge. And I can go ahead and put that on here so you can let me know what you're looking at. So that market changes lanes. So this is the balance edge. This is the imbalance edge. This is what we call the extreme edge. So actually, you got to close the door there. So a lot of people are trying to take profits right in here. Now, also the institutional traders are positioning themselves, which they do from 8:50 to 9 o'clock Central Standard Time. So we are above, we're in the extreme area here. So at 9 o'clock, there should be some kind of move. Are we going to continue in this extreme area here or not? So I bring over the macro chart, and here's what we're looking at from a macro perspective. So here, bounce areas right in here, but because we're at this extreme edge, this extreme edge, or the imbalance edge, shall I say, because this is the extreme edge here up at the top. So these are just high volume areas here. You know, these are just high volume areas as you're changing lanes. And so going from balance to imbalance, from imbalance to extreme. And as you can see, and that's the reason I took profit early in that trade, even though the rules are met, and even though the market, for all intents and purposes, should be moving up, but simply because we ran into those edges, that's where and I'm looking at that chart. You know, of course, I have multiple screens up, and I'm able to kind of vacillate back and forth and look at those charts. But so we'll just see, you know, so on a $500 trade, that's one contract. So on a $500 trade, making about $75 on a $500 trade. That's you know, that's pretty good. I believe. So on that trade, really quickly, it made $30. So on a $500 trade, so one contract is $500. So that would be the original number here, $500 trade. And if the new number is $570, so that's what was made on that trade. That's a 14% increase on that first trade that you just saw. So to make 14% on your money, I think that's, you know, that's pretty good. That's pretty strong, if you will. So So we got to close above there. So we'll enter into that trade with our stop loss being here. And as you see, I'm gonna bring my target here because that is the top of that balance, if you will. And so boom. So as you see, that trade, I entered into this trade here because on our macro chart, that was the setup that I was given. You see, and so you have to just kind of take the setup, take what the market gives. And so at this particular place right here, and I could have held on, but this is a live account. I am trading and I am talking. So that's sometimes, of course, that's my that's my breakfast plate. I mean, you know, trading is something else where you can trade anywhere in the world. You can do, you know. So anyway, so into that trade. So let's look at that entry right there. So that entry was here because this constitutes what we call a bounce trade here. But you see, because we're in the extreme, and also when I saw this horizontal line here represents the beginning of the supply area from the day before. And you'll be taught how to pick all of that stuff up. So let's just kind of look and just kind of track this thing and see what we have here. So here, this was what we call our prime liquidity right here. Prime liquidity line. All right. And then this is what we would call a bounce entry. A bounce entry here. Okay. So that's your prime liquidity line. That's your bounce entry that took place right in there, as you can see. So as you can see, here is the arrow. Here is the arrow right here when I entered that trade, okay? And here is where I exited that trade because I wanted to come down below this trouble. And you see what they did. They manipulated this trouble area and then brought it back down. And so that's the reason we have to make sure that we follow all of the rules, right? All of the rules. So I was able to get in there and work that particular trade. Okay. So as we can see, and as you can see, that's $239. So that's made. So if we're talking, that was a $500 trade. So let's look at what we had. So that's a $500 trade again. So the total was $99. So let's go $239 minus 99 equals $140. Okay. So that's how much was made on that particular trade. Okay, $140. So let's look at that. Let's do the math. So if we have 149 plus 500, $140, not 149, 140 plus 500. That's our new number, 640. Okay. So 640 is the new number, 640, and 500 is the old number. So now look at this. I mean, I can't, make this up. Yeah, I mean, you look at it and you see. So if that was a $500 trade, because I was using one contract, right? And that's how much it costs to trade one contract. And then I made 140 on that particular trade. So this is the new number, okay? And then that means that was an increase of 28% on that one trade. So we take 28% on that trade, then we take 14% on the first trade. And so 8 and 4 is 12. Carry the one, like my teacher used to say in first grade, 2, 3, 4. So in one day, that is 42% that I just made just sitting here today, and you watch me do it. And this trade was skewed because there was more money made, because this second trade was skewed where I made the 14% because I entered on the wrong chart. I was on a micro chart because I was trading my smaller account and I was on a micro chart. So, hey, guess what? These are some of the things, I mean, when you come, get with us, I mean, you just really need to text the word profits to 94253. Text the word profits to 94253. And that's the word, that's PROFI. I'm in the hotel in the breakfast area, and then that's Biggie Smalls they're playing now. Biggie, 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 can't you see? All right, so that's the text the word profits to this number, 94253, so you can learn more about what we do, and perhaps book a call, have a conversation with us. We'd love to serve you and take care of you. Okay. So let's go back and see, are there any opportunities? Okay, so what we see now is we have to go back into analysis mode. So that's one of the things that's critical for you to understand, is that you're not just trading, right? Okay, so you are an analyst. You are an analyst first, and as an analyst, there's some work that has to be done. So. So now I need to go back to some higher time frames. Now, as we're moving up, we see that we're holding here with our white. Can we get a close above now? But we see that there's a resistance area right in here. But as we see, that market is trying to get back into this extreme area. So all of this is extreme. Anything above this big brown line is extreme. And so what that simply means is that, the market is so far away from true value. And what I mean by that is simply this. Let me show you well, let's make sure that we don't have another opportunity here first. So let's go and look. Let's go look at our market structure here. Now confluence, let's put it all together. Okay, so what I'm looking for to make sure is that, can we get past here? And you might be saying, well, where did this green line come from? That's a great question. Let's look at that. Okay, this green line came from the fact that this is the beginning. You see, this is the beginning of the supply area. So as you can see, the market is marking down, and this was an area of supply. How do you find supply and demand? We will help you. So in between the supply, so when we started off today, we had supply, and then, but we marked this, the supply that's previous. The previous supply would be here. The supply that we would run into if we continue would be up here. And how you mark supply will teach you all of that. And so the market is marking down. So this is our supply area. And so therefore we now can't trade anymore because we need to make sure and we need to know, are they going to turn the market back around this way? Are they going to go through? But this is an area where it's a no trade zone for us right in here. So let me just put that here for you, no trade zone. No trade zone. Okay. No trade zone here. Okay. That's a no trade zone. This is a no trade zone here. When I say no trade zone, I'm talking about trying to trade through it. You wouldn't try to trade through that. If that makes any sense. Well, I think I may have, my computer audio is off, so hopefully you heard some of the things that I was just saying. If not, we'll explain it to you. No, so So here is today's, this is live trading today. So as you can see, so the total net profit today, $239 right there so far. Of course, this is the day, all right? So 3 trades were taken at 100%. And as you can see, the largest winning trade was 140. I would have had 2 winning trades, bigger trades than that. But like I mentioned earlier, I was on the wrong chart, trading a smaller account as well as a larger account. And on the smaller account, I ended up making $23, which would have been actually $230 on the larger account with the E-minis versus the micros, you know, so that's kind of what's going on there. And so when you look at the analysis here, you can see, so 220 made 3 contracts traded, 239 bucks, 100% win rate. You know, this is what we do. This is what we do. This is how we do it. That's what we do. This is how we do it. Live trading on the market. And so and if you want to know a little bit more about what we do, you can just simply go to your search in your browser with your URL and put in Amazon.com and then type in my book, which is The Money Market Autopsy. And the way I'm killing this market right now is the way we kill it all the time, and I'll teach you how to do that. So the money market autopsy. And so it's really just a a a I guess a glorified explanation of what I'm doing now. For those of you who don't know much about markets, and markets, it'll give you some kind of idea, about the markets, things of that nature. But you should go check it out if you get an opportunity. Also, you can check us out on the World Wide Web at www.moneymarketedge.moneymarketedge, and here's our website. Click through the disclaimer really quick, and you can kind of look at stuff. These are things that we offer: daily Q&A sessions, the software, strategy, support, coaches, and success. So we have the software, we have the strategy, and the support. Those are I guess if I could say why people win, it's because they have, first of all, they have an edge, right? So we have a software, then we have a strategy that can be checked out. Quantitative analysis will show you that it works. And then you have the support. And another form of support is also we have daily Q&A sessions, and our coaches, they're really phenomenal and awesome. And your outcome is way more important than their income. They really love coaching. They really love, teaching, things of that nature. So you ought to be a part of, think about, being a part of what we're doing here. Some great things that we have in store. So let's come back and let's look and see what we have. The sequence of these ropes are not the way I would like for them to be. Here you saw we had a close beneath our white rope. We came back above and closed above. So but this area is an area that that's a resistance area. It's marked, we marked that earlier. And so we don't trade through resistance. This is the supply area for 2 sessions ago. All right, so supply area that we've reached, and we want to see how we handle this supply area here. Supply area. And so you can see the rejection that's happening. Whether it comes through there and goes through there or not. Typically when it does go through, it's a quick move, if you will. It's not something that's slow and haphazard. It's a quick move here. So this is our supply area. Now, when you deal with the supply area, you also have what we call the point of control of the supply. All right, and the way we find what the point of control of the supply is we measure this. We measure from corner to corner, which I'll do. We measure it from corner to corner, and not just simply go and get a tool here, Fibonacci extension. Okay, so we see we're pressing through here. Okay, we're pressing through. All right, so I want to know, where is the point of control? Where's the point of control in this supply area here? All right, and that point of control would be here. Okay, so we see we have a little room to get to it. Okay, now we're at that point of control. Now what's going to happen here? Are they going to blow through that point of control? And it appears that that's what they're trying to do. Okay, so you see that that's a pretty strong move, but we could be looking at a manipulation of that point of control, meaning that they'll go through it to get people to go long and then fall off of it, because this is a supply area, because the market is marking down overall. So it's on that entry chart. You see that strong rejection we got right there. So I just put that there, that point of control, and you see exactly what happened. We're getting a supply signal to it. A supply signal too is a long wick at the top of a candle, right? So we see either people are taking profits or this is an area where supply has been met and the market will start going into either consolidation or reversal. Now, typically, when we get to these areas, if the market is going to continue, typically it blows through, pretty strong. But as you can see, that didn't happen. And so when we come back and we look, where are we? Are we in an extreme area? So we are still in an extreme area here. This is an entry based on this. But let's see if there's a prime, and there's a prime liquidity line here. You see it? There's a prime liquidity line here. Prime liquidity line here that we're bouncing off of. But because we're in that area and that point of control is there, that's not something that I feel comfortable trading into, period. That's just how it is. Being patient is the holy grail of trading. Not necessarily trying to make money. You're number one, you're trying to be an analyst. You are a market analyst first. Then after you are an analyst, then you are a risk manager, right? So our job as traders, retail day traders, trading our own money, our job is to not take unnecessary risk. And so that's what I would call this. I would call trading into resistance areas and unnecessary risk. Can it go through and pop through? Of course it can. Of course it can. But that still does not delineate from the fact that would be a UR in my book, an unnecessary risk. Why would I do that? Now, if it's going to keep going and blow through there, then fine, go ahead. But get above the red. Get above the point of control. Get above the point of control. Okay. So what we do, we wait. We spend time waiting. We spend time being responsible. We spend time managing risk. Spend time managing risk. And so when we reach areas where the market is having trouble going through resistance areas, we need to see those areas broken. We need to see those areas retested, period. I'm really having a ball hanging out with you guys today. As we look at the charts and as we look at the market and see what we have and see what we have working for us and with us, if you will. See this area, we're having a problem here. So we only have actually 4 more minutes. So in 1 hour of time, this is what we were able to do. In 1 hour of time, we were able to in 1 hour of time, we were able to make a significant gain. So that's $239 there. As you can see here, there's $239 made. And when we took one trade, we got 28% because that was $140. And then on another trade, we got 14%. So we took 2 trades, one for 28% and one for 14%. For a 14% gain, 28% gain. I don't think that's bad at all. Okay. So I like to only trade an hour a day because I don't want to create a job. I like trading and learn to trade and teach trading so that it will free you up so that you can do whatever your passion and whatever your purpose is that God has designed for you and put you on earth to do. That is what this is all about to me. So you can trade for a long time. Uh, you can trade all day if that's what you decide to do. But for me, being able to enter into this trade right here, and on this trade, this is 28% made on this trade here. So it's a 28% gain. It's a $500 trade, and there was a 28% gain. So we made 28% here, okay, on this trade here. All right. And then on this trade, because I took 3 trades. One trade was on the end on the on another market with the minis, and okay, all right. So here we took this trade right in here, and this is a trade. That's what I love about this. So this trade was taken right here. Of course, that was a mistake. Traded into this liquidity line here. However, the stop loss was here because remember I talked about and I pointed out this box that if we had gotten a candle beneath here, then that would have been our stop loss. All right. So, but we retraced here and we kept going, and then we exited here because we were already at a high, right? And the market was at an extreme here. So this is where we exited this trade here. And that wasn't the cutest trade set up here, only because I traded into something here, but we were able to wait here. But actually, this is a late entry because the entry should have been back here, but because I was on the wrong chart, and I'll call myself a dum-dum there. I was on the wrong chart. I would have been able to enter here and I would have been holding on through here and perhaps still been in all the way up to the top, all the way up to that top in that one trade instead of having to make 2 entries. So anyway, this trade here was 14%. That's a 14% gain here. On this particular trade, it was a $500 trade. 14% was made here. I think that was $70 on this particular trade here. So we will go 70 bucks, 70 bucks. So that was that one. Let's make sure we have our numbers right. So if it was a $500 trade and 70 bucks was made on that particular trade, 500 new number would be 570, 570. So so that was a good an increase of 14%. You see that $500 trade exited here for 40 bucks. And let's check our math. Like the teacher used to say in school, check your work. Let's check our work here. This trade here made $140. So let's put that here. So this trade made $140. It's a 500. So 500 plus 140 is 640, isn't it? Okay, so 640. So that's a 28% gain. 28% gain. That's what we have here. And so this trade made $140. So what that trade made $140 here for a 28% gain. So uh, so that's what we did. So we paused at like 9:25 so that profit taking can take place for those exiting in the London session. So, well, I'm Cornelius Wilson Brown III. I'm the author of this book, The Money Market Autopsy here. Love for you to just go and pick that book up so you can kind of see what we do, how we do it, things of that nature. And if you want to go to our website, this is our website, moneymarketedge.com. And And you can come and we would love for you, our educational staff, they're wonderful people. We would love for you to be a part of what we do. God bless. Have a great day.